All right, let's go ahead and take a look at gold, man. Go ahead and start this up. So from a monthly, you see just right away, just this last down to up candle, this demand zone that has yet to be mitigated. It's probably go ahead and look to a lower time frame to see where it's reacting to. So we actually created equal lows as well, just a little bit. Yeah, we have a couple of wicks right here. So this is definitely a lot of liquidity sitting right here. Looking at this area in the future, not right now because obviously big old time frame, but we do have, if this liquidity gets broken down to, this would be that next target that I'll be looking for. Let me go ahead and bring this back a little bit on the weekly. Yeah, so right off the bat, this is that monthly demand zone. Let's go ahead. Right, monthly, and then this is our weekly. So right now, if price decides, if it wants to retrace, this is where I'll be looking for at first. But because we have all of this liquidity right here, I can definitely see that being grabbed to go and take lower demand zones in areas that have yet to be unmitigated. And if we go back to real quick, even if we want to do just get a better idea of where where we could actually see that happen, I always take the 50%. Boom. Where's my whatever? So on the daily, we have started to break structure towards the upside. Break a structure right there, break a structure right here, and so this is within our monthly time or our monthly demand zone. So we can go ahead and refine areas of demand, right? Within that our zone. So this is the unmitigated zone right here. This caused this break a structure. Right here, you also have this last down up move as well that caused a break a structure to the upside. This move didn't really, it wicked, but this last down move literally took all of this liquidity, like these highs, took out these equal highs to trade higher. So these are valid points of interest for me at the moment. You also have this one as well, right? Right there. So we all have all these, a couple points of interest that we can look for at gold at the moment. But where I would definitely be looking just for a safer retracement would definitely be down here. Because I feel like this is the last major down move, right? This is the last major down move before this big push up. So this is going to be my main point of interest right here, especially because we have this lined up right here. Wait, is that the 50? That doesn't even look right. No, that's not the 50. What the fuck? So down here, just in these zones, that's where we're looking. Where could price be traveling right now at the moment? Let's see. You do have on a 2-day this last up to down candle, right? Supply hanging out over here, and price hasn't fully shifted bearish yet, but or bullish. I mean, we are still in a bearish structure. We're making lower lows. This is still a lower high than it is. But if price wants break above this, we start looking for buys on the demand zones left behind. Because we have a lot of shit ton of liquidity right here. You have all these equal highs that can definitely look to be taken. And if these do get taken, if we do see something, just like a break and then a retest into something, even just like this, that's going to be valid to be able to go onto the upside, because we're seeing structural shifts that make us want to go ahead and start following that trend. So yeah, so this is a zone. The way price is moving right now, I'd like to see a reaction in here. If it could either react or it could just go and take out all this liquidity, either is fine. Because my bias isn't strong on a sell, I'm not really worried about these zones, these levels up here. I just want to know how price is going to react to them. I'm more interested on getting the buys down here to take price higher. So let's go ahead and look on a lower time frame. Even Go to the 8 hour. Again, there's not too much. These are just the zones. Looking at them on lower time frames. Go down the 4 hour as well. Let's see, if you want to do some refinement, you can. If you want to refine to like something somewhere down here, right, from a higher time frame perspective, you can totally do that. And just because we all have all these points of interest doesn't mean price is going to react to every single one. We're always going to be wanting to look for structural shifts and things like that. So if we want to take a look somewhere else real quick. So like here, I'll go down here. So when you have price coming down here, something like this, breaking all of these highs and coming up, retesting, whatever, that's what we want to see down here. And at the moment we haven't gotten that yet because price hasn't really came deep into this. Even though it's showing bullish, it hasn't, for me to really be a valid bullishness, is to come and break into that. So that's what I'll be looking for. And on that, and like I said, I wasn't carried about those. This sell zone up here, there's definitely more points that you can probably get into even right now along the way to be able to continue up, because we are, even though on a lower time frame, we are making higher highs, higher lows, and we are showing bullish structure. You can definitely be valid to take trades from these areas right here, these last levels of demand that are left behind. You have a schematic right here that kind of played out, took out some lows, broke structure. This is exactly what we want to look for when we have our points of interest. Obviously didn't catch this right, but so we have lows that were mitigated into, let's see, you have this imbalance right here. So maybe you're targeting that. You have this imbalance in price, have this big push. There's no wicks or anything in here. So you have that imbalance in price, the price tapped into that, taking out these lows. And it also, so after it took out these lows, it shifted structure, breaking highs, testing into, maybe there's a demand zone somewhere else on a lower time frame, right? But it tested into this last overall move and then started to show structural shifts. Excuse me, to break higher, right? So after we broke, had a retest and you had one more retest, and then you're breaking higher, showing signs of strength to the upside. So that's exactly what we want to be seeing on all time frames, and especially in that higher point of interest, excuse me, that we denoted down here. So that's what we're looking at right now, just on gold. And now any of you guys, if there's any other pairs you want me to look at before I go ahead and start doing my back testing and showing you how I get into my trades and everything, just you can either shout them out, whatever. Nothing really. You guys are free to talk if you want. If not, then we'll just go ahead and
what do you usually use for confirmation when it comes down to actually an entry?
An entry. So I'll go ahead and get into that now. I'm actually going to pull up my I'll go ahead and pull up my backtesting sheet that I have just to show you guys. We can even talk about some of those tests just or some of those trades just off of screenshots, and then we can go ahead and go into the live market as well. So let's go just take one in. So this is a great example of how I'm looking for trades. So this is on the daily time frame, right? When I do my back testing, I start from the monthly, and I just, because you can't really go on those lower minute time frames and stuff, I just look for breaker structures and everything like that on the hours and everything like that. So everything works within, you're going to see the same types of breaker structure. You're going to see the same supply and demand zones on a daily that you see on a 5 second or 5 minute, anything like that. So it's just, just understanding how price moves. You're going to be able to catch moves on any time frame. So we had this break. We had these equal lows that were placed right here. This last, so you had equal lows right here showing that there's, there's liquidity, there's stop orders, there's stop losses, and just people orders right there. So we had price, one big candle, one demand candle break down, and then price broke up. It didn't break these highs just yet. So I wasn't even looking at entering right there. I was still waiting for confirmations. Once we broke these highs, I was looking in to start looking in to enter this trade because we were showing signs that we were shifting. We broke these highs. We broke these highs over here. And we had this last demand zone that was left behind. And I believe it was on an hourly or 2-hour time frame that we had that I took this trade on, that there was a confirmation in there, but this is kind of something that I'm looking for. You have, if you're looking for a buy and you see there's liquidity, make sure to wait to see if that liquidity is going to get grabbed. Because even though if you bought right here and the buy was still valid, you were right that the overall bias was going to be a buy, you would have got stopped out because knowing that there's liquidity to the left. So just always understand that if there's going to be liquidity to the left, just be aware that that could possibly get taken out before you see a shift. And that's why it's nice to wait for shifts and see that there's, zones that are left behind while there's a move occurring. If there's, prices starting to break up or break down, there's areas that, that you can possibly enter in. So that's just one of those trades that we took. And I'm going to actually show you a loss. This was a great example of not waiting for structural lows to be taken. So kind of the same thing, GU before it happened. You had lows. I think this was earlier in the week. This is the same thing, kind of what I showed, a different trade, different back testing session. But I got stopped out on this, because there was these lows, right? So essentially, I understood that there was these lows here, but we were breaking structure, right? We were breaking structure, and we were coming down. I thought this was the final liquidity, right? We had these lows right here taken out, and I wanted to enter off this. This was, believe this was a higher time frame monthly candle, or maybe even a weekly, but this is the last essentially down to up move, right? That broke structure essentially to go higher. So this is where I thought it was gonna occur. And on a smaller time frame, this would have been profitable for sure. This would have been 100% profitable, because if you're on a lower time frame, you didn't get stopped out until here. And honestly, this is a daily candle, so this is probably a week's worth of data right here. So if me entering right here, this is a valid play. You could have targeted this last up to down move, but I was targeting higher structure because I thought price was going to go higher, and it didn't do it just yet. What did it do? Stop me out, grab liquidity. But this move was still profitable before it eventually wasn't. So that's going to bring up another point. You don't always have to aim for the highest fucking structure. You don't have to aim for to the moon or whatever. You're going to let it drop as far as it wants. Aim for areas of where you can see price reasonably reacting to. So for example, if I was paying more attention to this, I would have maybe just set my target here, because I understand this is the last down to up move, and there's probably orders that are still unfulfilled in there that need to be closed before making the full shift of a bearish structure to buy bullish structure. So that's that. And I'll show one more, see if I can find a really good breakdown. This is a great breakdown right here. This is another example of how I get my confirmations. So this zone up here was a supply zone. I use red for my supplies. So this was a higher time frame supply. So I had price wick into there. And this all depends on what type of trader you are. If you want to be a trader that takes trades when your price enters, or if you want to wait for extra confirmations. I used to just enter based off if it would come into my zone. I would just enter. Sometimes I was profitable, sometimes I wasn't. But I found, waiting for these extra confirmations is actually way more helpful. So we had price tap into this zone. It broke down. That's cool. We missed all these pips, but what happens, when price moves away, it leaves behind areas of interest. So we had this supply zone that was left behind. So this was already one confirmation that price was starting to shift bearish after it tapped into this higher POI. And as price was coming up, I denoted that we had this last up to down candle. This is where I took my entry on. Because right here, this area right here to me was equal highs. And what price did is came up and it tapped, you know, grabbed that liquidity right into this demand zone. I believe this was the 50% of that too. I didn't have it marked up, but you know, like I showed in here, or where was it earlier, that we used like this line right here. We try to use the 50% of the overall zone just to get safer entries. So where was it? That's what this was. I believe I just deleted it, but this is that trade how I took. So, you know, you have a confirmation already from this, and then you're seeing another sign of confirmation break there, tapping into demand zones or supply zones before breaking that, having that confirmation. And now we can just go ahead and go and start going to this back testing. So I can honestly just do, here, I'll just go, let's do EU. EU on Wanda, put on the monthly. Let's go do this real quick so I don't see shit. Right. Where we at? 20. Let's go 2017. Cool. Okay. All right. So, and when you guys are back testing, I believe it's best, you know, do it from, I mean, you can back test however you want, but I would prefer doing it from always doing your top downs just to really understand and get a real feel of what price is doing. Because as you're understanding, you're using these higher timeframes, you understand that these moves, these higher timeframes are going to hold. And they're telling a story. So being able to understand what price is doing from a higher time frame to possibly what it might want to do in a lower time frame is very important. So so get into it. So at the month, on the monthly time frame, we are in a bearish structure on EU. Down here, we do look like we have a schematic that possibly played out. We have equal lows that were taken. You have structure that was broken. Let's just draw it from right here. You have structure that was broken to the upside. And if we want to label it, you can go like this. Selling climax. This is all Wyckoff secondary test. This would be probably your automatic reversal. Or it'd be like right there, automatic reversal. That would probably, this would probably be a small sign of weakness or sign of strength. I'm sorry. What the fuck? Should probably close off. All right. Then you eventually have your spring. What your spring does, it takes out all the liquidity that was made from the selling climax and the test to trade higher. And we have that spring, we traded higher. Now what we can we look for? We can look for areas that were left behind. We have, let's do, I'm sorry, not that one. Higher time frame demand. We have this shift, and you can also look at this whole move as well as demand. I'm bugging out. Right, I'm going to take the 50. 50. And I can take the 50 of this. And now we can start to look on the daily and see what daily's doing. So I'm looking for buys on this. Let's go ahead and speed it up. See if we even get a return down here. Let's see, can I look on a lower time frame? And it's totally okay if, if your POI doesn't hold, that's all right, scratch it, move another one. Because there's always going to be point of interest that are made along the way. So as price is coming, she's created some liquidity at the moment. That's good to see. If you want to look at it from a different standpoint too, from a pattern standpoint, you can kind of see this is a head and shoulders. You have the left shoulder, the head, possibly look for a right shoulder over here. Let's see how price plays out. So it takes that liquidity. Doesn't want to continue down. So it looks like it's starting to trade down lower. Oh my goodness. It's taking forever. Grabbing some more liquidity. So it's taking building some more liquidity. Right here, you have these lows taken. Let's go ahead. And on a weekly too, we also have this. You can, so this is a demand zone that was left behind on the way up. We can also, I just noticed this because I don't really pay attention to the weekly, but we also look at this for potential plays. Let's go boom. All right, and I'm gonna start going to the daily just to see how price is moving. So we have these lows taken. All right, looks like it doesn't. Takes those lows again. Okay. Right, so all we're doing is just creating liquidity on the way down to possibly be buyers. Okay, so boom, price taps into our POI. Let's go ahead and here, I'm gonna move this. Let's go and take this. So this is also the 50% of this last overall down move that we saw from the monthly, right? This last overall down move, this is the 50% of that. And on the week, or where was I just on the daily? You have this down, this last down up move that was left unmitigated as well. So now, just because even though price is just in our POI, I'm still not looking for buys just yet, right? Because even though it's in, you know, it could easily just take us out, continue lower. We want to see those confirmations. So as it's in here, you can even go to a lower time frame. This is how that I would do it. I see, you know, we price tapped in, but we have no confirmation, or we have no structural confirmations yet. So we can just keep letting this play out. Excuse me. Even lower, right? And this is totally fine. So just because, so like say you're backtesting and, you know, price in your POI and it doesn't work out, that doesn't mean the trade was wrong. It just mean it's just, you know, maybe going to a different level before starting to make that shift. Oh, come on, don't freeze on me, bro. Let's go ahead. So no shifts. So we have a small shift right there, right? We're in this overall point of interest. It never broke. So I can I'm just delete that for now. We can just use this. So we have this break. This is the last. This is that last down move, right? And always understand that, you know, on higher time frames, it's gonna show something different. So on a higher time frame, you might see other areas of demand that you might not see on lower time frames. So on the weekly, I'm gonna go ahead and use this. So when we were on the daily, right, you know, all of this just looked like cluster. You have this last down up move, but when you look at the weekly, you can see that this is just one last big down candle that shifted, took liquidity to the left and broke structure. And now what you can do with that information, you can go ahead and take a fib. All right, 50%. Understand, look for zones that are left unmitigated in here that you can possibly use to take up. Just like these, you got this last down up move that started to take break structure on lower time frames. You can see this last area, you know, took that liquidity right there before breaking up. Let's go back to the daily. So this is our point of interest right now. And honestly, let's see if we can go down to our lower time frame to show you guys an entry. So in this moment, with this information, you can take a trade off of here, off of the 50, if you like, because we have our confirmation, right, of structure being put in place to want to trade higher. This structure was broken, this structure was broken, and now we're tracing into those last demand zones. Sorry about that. So this is what we have on our way down. Let's see if we get tapped in. And you can also, you don't always have to take the 50. You can take you can go ahead and take your trades off of the open of the demand zone or the supply zone, right? It doesn't always have to be the 50%. I use the 50% just for confirmation, just to be safer for myself. And I back tested this. And you guys always back test your strategy to see where your entries work the best. If you find in your back testing that you're more profitable when you take entries off of the open versus the 50, go ahead and do it. It's just all totally up to you. And also, maybe you can also have that, or you can just understand that, price may do something different at the open or the 50. So just be open to that. So we have these areas. Where was the 50? We had the 50 right here, just about, and you have the open. So we can go and see how both of these play out, and noticing that, you are still also in this overall demand zone. We'll go ahead and see. So it looks like price took off right off of the open. And in this instance, where would this is what I was talking about earlier when I was showing the screenshots, right? Where would you be wanting to partial? You don't always, have to partial at the, the highest fucking high or the lowest fucking low. This could have been valid. You could have partialed at these structural highs. You could have put your stop loss right here, and you could have been writing in profit. You could have closed 50, 25%, however you want to close it, and you could have still been in profit and just secure that profit. And that's why it's always important to not, you don't always, I'm going to keep repeating myself, but you don't always have to go for these super structural highs. You're going to be able to make money regardless in any of these zones. Just being able to, just understanding that you're going to secure your profits as much as you can, but not too much, because sometimes you can over partial and be left with nothing as a move continues. But secure money when it's possible and where you can along the way. Just because we have all of these confirmations, at the end of the day, price is going to do what price wants to do. So you could have been in profit for a little bit of using a good lie. Oh fuck yeah, and then boom, just straight down, taking more orders, and you would have, you were once in profit, now you're not. So understand that. Excuse me. Along the way, take partials at, structure, or what you can do is take partials at, not even that's just structure, just areas of supply or demand, because understand that, there's going to be some mitigated, some unmitigated, and that comes with training your eyes. But there's areas that still need to be tapped in, so you can also target these. This could have been a valid target, this structure could have been a valid target, and this was valid. So you could have looked at that as your TP1, 2, or 3. Or from down here, if you're entering right there, you could have partialed on a lower time frame somewhere over here, and you could have even taken just these highs or this last supply candle, right? These are all valid areas of being able to take profit, take partials, whatever you want to do. It's all, at the end of the day, it all comes to risk management, not over trading. So that's one good example of that trade. Was this the one that we took? Yeah, this one hasn't done anything yet. So we can go ahead, add this to our back test. I'm going to do this, right? And make sure you guys are back testing and journaling as well. This is my little log. I don't really pay attention to the time frame or anything. I just show the pair, the result. I put my win. I have been being lazy with my comments and thoughts on them, but personally, I've been taking them in myself. So this is just something that you guys can do. Wait, what did I fuck that up? I believe I fucked that up. No, we're good. But yeah, that's how I would do that. What's today? Is it 17th? So you can just do that, and that's how I would log that. So there's one example of that, and let's go ahead and keep moving along to see if we can go ahead and catch some more trades. So once again, understand, there are other things that happen on the higher time frame, right? So boom. So where were we? We were on the 4 hour. Okay. So we had that win. Let's go ahead, take that off, partialed, whatever. Moving along. Price still hasn't tapped into this 50, so it is valid that price could come down. So let's just go ahead and keep watching, see what price wants to do, right? So here's a good example. If you didn't partial, if you did a partial and you set your stop, if you did it, if you didn't have a trailing stop, right here, or even, somewhere below at break even, this is where we took that trade, just somewhere a little bit above where you're going to profit, you would almost be negative at this point. So just understand, always secure your profits. Don't, try not to leave any money on the table, because at the end of the day, if you're managing your risk well, the profits are going to be there. The money's going to be there. Even if a move is half right, you're still able to secure profit. So that's what I'm trying to get at. So risk management, put that shit in your head. Let's go and keep moving. So breaking down, looks like we created some liquidity, right? Created some liquidity on the daily. Oh, we have a chat. People periodically. Got you, bro. So we still have this down candle, right? This has been unmitigated. Let's go ahead and both do that. And I'm just gonna go ahead and clean all this up because we know where we are at the moment, right? We're in this overall zone, and we're working off of zones that were created within. Let's go down, go back down to the 4 hours to see if we can catch these. So we have liquidity, right? Understanding what I showed from earlier, my backtesting log, understand, that there's liquidity, look for liquidity to the left that can be possibly taken out. This looks like what it's going to be doing. Creating more liquidity, finally broke that. So it broke this liquidity, created some more, right? And then we had this final, if you will, you had this final break right here. Let's go ahead and now follow price. Holy shit. All right, so you have this big old structural shift, right, to the upside. And within here, if it permits me to, see if you can find some type of schematic going on in here, or anything, or you just understand here. I'll just try to explain it like this. So you have your point of interest, right, mapped out, and price is gonna put in lows. What has to happen is, as these sellers are getting out of their sales, or they're giving their orders to buyers. So this is why how this happening. And if you want to do in Wyckoff terms, you have the liquidity, and you have the spring that takes out the selling climax and the test, the shift higher. And this is exactly what you had in this area. And you could have been looking at this, if you had a point of interest over here, or you were just looking at price, this could have been something that you definitely could have caught. So you have this break of structure, and right, so you have this break of structure, you had this break of structure as well. This is pretty impulsive. So where you could have been looking to enter off of this, let's go back for a little bit, right? You have this structural shift. Where's an area that I'll be looking at? Definitely the area that caused the move, which is this candle, right? Now price doesn't always have to come back there, as you saw before I fix the replay. Price will, it's not always going to come to every zone that you see and mark up. There's other levels that you can look at. So you have that. What do you also have? You have an overall move that started from up here. This was the overall last down move, right? And this could have, you probably could have seen this on a higher time frame, right? You have these last two impulse candles, and you have this big push up. So that's kind of shows how, all the time frames, you can work within all of them. And what can we do from this? And both, I'll do both. Boom. That's the 50. That's also lines up with the open of that demand zone. You have the 50 of this demand zone. And what is one more thing that you can also play off of? We can also play off of, we can also play off areas of imbalance that are created, right? Because price, move too fast away from a certain area, leaving an imbalance of price. There's no wicks in between this. So this is an area that's also going to be mitigated or filled before continuing higher. So we can go ahead and mark that up. Then move these structural breaks and all that crap. We already know what's going on, right? This is what we have. So these are valid areas of interest. And, it comes down to, just understanding that, what is price doing in these areas. You could have been valid. Let me go ahead and do this one more time. So, and with the stop losses or with the long positions and everything. So here's where your setups can be. You can do like that. Higher. Oops, excuse me. Structural highs. Target that, probably that liquidity. And let's, before we do anything, definitely target everyone off the 50. You can target this imbalance, right? These are all valid areas. Where is this last here? The imbalance. Because this is also a valid point of interest for where you can look for buys. And this imbalance is also around the open of that. So let's go back. Where's it on the 30? All this liquidity buildup, right? And we saw that price, price took the imbalance and traded that. So it looks like you would have got discussed. Almost. You would have almost gotten stopped. I set it just a little bit below. But, you can play with this, manage your risk and stuff like that. I had it just a little bit below, I believe. Let me see. Yeah, just slightly below, whatever. So this is showing you, there's other levels that are going to be played into. If you're looking for this imbalance, I don't usually trade off of imbalances. I usually wait for the supply and demand, but just know that these imbalances are valid. And price broke off of that, ended up trading higher. And what can we do from now? Let's go ahead, see what price is going. Let's go and delete everything we have right now. So fresh chart. So we have this overall structural shift down here, right? We can look at structure from a higher time frame or a higher point of view now. So we have these lows being taken. This is the last down move right here. Structural shift up, breaking structure, tapping into demand zones that are unmitigated before trading higher. So this is literally like understanding how price is moving, and this is how I'm looking at the market to be able to get into entries. Let's go ahead and remove all of that. Continue with what we're doing. So from a higher time frame perspective, let's just move. Let's move a little bit more. Let's let price play out for a little bit more. All right. So now we have a structural shift. Price is printing bearish at the moment. So, as we can work in between everything, all time frames, buys and sells, what are we looking at? Areas of supply and demand that shifted structure. So we have this last up to down move that took these lows out, mitigated these lows. And let's look on a higher time frame just to see if there's points of interest. And yes, there is. So you have this last down to up candle on the monthly. This to me, actually this wasn't mitigated, so this is definitely valid. Yeah, this is a valid. This is good. So on the daily, we're moving in here. What do we do with our zones? Just to show it. Mark it up. Boom. 50. There's our 50. Go on down to the daily. Or here, let's go down here because this is what we're having. So price has been moving pretty impulsively, on this way down since breaking these structures. There's nothing really on the daily. If anything, this small POI right here, this last down to, or up to down move, is it's valid to look for potential sells on to continue down. At the moment, I'm not looking for that. I'll be looking for this more open, this larger time frame buy. If price gets into here, on a lower time frame, get a confirmation, we can definitely look for sells. But at the moment, we're looking for these buys. So prices came into our POI on the open. It's created some liquidity. broken liquidity. You have more liquidity building up. See how price plays. So you have a structural shift, right? For me, even though we have this structural shift, we still have liquidity lying here. So this is a trade that I wouldn't be comfortable with taking. But if this lines up with your your trading, and this is good enough for you, this shift, you could have been looking to take your trades off of these, this last down move. You could have refined it to see if there's a 4-hour candle, some higher candle, yeah. So, always, these, the higher time frames are going to show, more, they're going to show clear these areas of demand or supply, because, this is that larger time frame. This is just one down candle, and on the hour, you see it's kind of sloppy. So that's why I use these different levels. But you could have, so back to what we were talking about, I wouldn't take this trade personally, but if this was in your rules, like I said, you could have taken this. You had these, you had liquidity taken, a shift, price took out this liquidity, took out these highs, created equal highs, retested not once, retested this area right here. This is the last down move that caused the shift. This is valid. This lines up also with, you have this last down candle. If you wanted to refine it to that last candle, you could have, or you could have just taken this whole overall area as one and played it off of that. You could have played it off the open, or you could have played it off the 50. Price wicked at that 50. So showing you, test your strategy to see where you want to take these entries. Because like I said in the beginning of the video, I take them off the 50 just to be safer, but you can also take them off of the open. Totally up to you. So you have this confirmation, right? You have a shift, these shifts tapped into the last demand zone left behind. This same thing kind of taps into the last demand zone behind, and we're moving up. We have moved up into that daily time frame that I denoted, or the daily supply zone that we denoted. Looks like we wicked in there on the daily. Let's go back down to the lower time frame just to see how price is moving. And now that we are in our POI, I know I said I wasn't looking for sells, but we can begin to look for sells, just to show you, if we get any confirmations on how, it can work the same way. Price is coming up, wicks, breaks structure, down, right? Not good enough yet. We still have this. So you have this right here that you can potentially play off of to go higher. So price is putting in highs. Looks like we wicked our 50. Wicked our 50%. Let's see if I can go down lower. I can go down lower. Cool. See if there's any. So no confirmation, no trade. It's that simple. Some, maybe when I was trading, a few months ago, I would have just done this, right? I would have just, price came into my point of interest. Boom, that's a loss. I didn't get any real confirmations besides this short sign of weakness. So on a lower time frame, definitely, because you have this wick on a lower time frame, this was a totally valid schematic. Price came up, took out equal highs. This was your, if you will, here, let's see if we can, let's label it. So you have your, say this is your buying climax. Right? Buying climax. AR. This is your, son of a bitch. This is your UT, your test. This is also like the ST. This is your UTAD, your test after distribution. After price distributed, this is your other test, taking out these lows. And then we broke down. You could have labeled this as a sign of weakness for a larger schematic, but just to show that, you did have a manipulation of structure, had highs taken out and you had lows. Up here, you know, if you were probably on a minute or something like that, this probably would have been valid. You probably could have seen a shift to be able to take this down. But overall, for myself personally, this was not enough to be able to get in this trade. And also because, you know, as we were coming up, you know, there was no other sign, you know, price didn't break down any lower than this point. If price were to have broken past this structure right here, if from here, maybe, if it came back and it broke again, then I would have been looking for if there was a supply zone or anything that was left behind from that other breakage structure, that's where I would have been looking to play, because there are signs that structure is willing to shift lower. You're taking out structure lows. So that's how I would have been able to put myself into that trade if we saw the proper steps and confirmations play out. But since we didn't have to get into the trade. That's totally fine, because, you know, first of all, you know, say this was a trading day for you from these back tests that we took. You know, we already had, I think we had one win. Already had one win already that ran for, I don't even know how many RR, but, you know, I understand that you don't have to take every trade that you see that comes into your point of interest. There's always going to be more setups, and that's something that I have, you know, had to deal with myself. I can say, you know, confidently that I have, you know, been a victim of over trading and, you know, revenge trading and stuff like that. Just because, you know, it does suck, you know, when you miss a move that you knew, you know, that you knew was going to work out and it didn't happen. It's okay. You know, there's live to trade another day and move along. So we can go and keep moving along with this. So at this break, I can go ahead and take this out, because now we are coming into this higher time frame. Last up to down move, and I think we identified this on the daily, where you can see on the weekly that it was just, once again, it was just one up candle. So this is why I use all these other time frames. And so now that we're looking at this, right? So we had this come into our point of interest, but, you know, price is still pretty bearish, right? We have a shift, and now what are we coming to tap into? The last down candle, or I'm sorry, the last up candle that, you know, caused these structural shifts. So go ahead and look at the 50. This is coming here pretty impulsively. So let's go ahead and let's go on 4 hour. I like the 4 hour. Boom. Okay. So once again, you can take these cells off of here, target lower structure. You can take it off of the open, right? This is on the daily. So these are valid. So if you're looking at this, these are your confirmations, right? You have structure shift, tapping into last demand zone. Also, if we notice this too, right? We have these equal highs that were mitigated. So this is definitely easy, valid sell play that you can look into, where you can do target areas of demand that are left behind. Also on lower time frames, you could target structure. You can target this last down to up move right there. You can target lows. This is what you can do, right? See how this plays out. So as we come in, creating more highs, and this trade was a loser, but that's totally fine. You know, as long as you're managing your risk, and you can see, so it's totally all right. You know, maybe this wasn't always the confirmation that you're looking at, but it happens. There's going to be losses. I was kind of hoping for a loss that happened to show you guys, you know, it's all right. It's going to happen. If you lose a trade, it's not the end of the world. You know, price is probably doing something else other than your, you know, what your bias was. But, you know, for the moment, if we want to look at the plus side, if you entered, you know, off of just the 50, you had a pretty decent return. That was what was that? 70 pips. Yeah. Oh shit. No, it was more than that. It was 100 pips. So if you would have caught this move in this instance, and what did this trade take? How long did this trade take? Price came up right here. 5 hours, 5.5 hours. You caught those 100 pips. This was still, and this brings me back to my other point of partialing. Because one, say you took this sell off of the 50, my first point, I would have already been partialing right here at these equal lows. That would have been partial number one. This would have been partial number two. This last candle, definitely in that area. And then you could have been looking for other areas as well. Maybe this last, up to overall up to down move right there, it didn't hit. Or if maybe if it permitted me to on a lower time frame, even this could have been a partial. This is how you can see there's always areas of supply and demand that are presenting themselves on all time frames. So this could have been your play. Let's go ahead back up. Right. Stopped out right there. Okay. That's where I think that's how it was. Did it go further? Right there. Okay. So right. And even on a lower time frame, you could have probably caught this. Let's see if it let it go down there. So you have this shift. You have a shift. You have a tap into. Maybe there's a demand zone down there. So on a lower time frame, this also could have been caught. You could have caught on a lower time frame, or you could have caught it just off of the entry, off of the 50, and you would have profited large. Like I said, this was 100 pips. This was a 100 pip move. So also, like I was saying, partial, manage your risk. Understand these moves aren't always going to last forever, right? And say this was a confirmation, right? This was like one of the confirmations. Maybe this was a zone that I was looking at after, because this zone, broke these structures, and I was looking for it to come up. But once again, it never really got anything going after that, after this move. So this play was valid in the beginning, and you partialed and you made your money. And then as time continued, price didn't go any lower, and it started to shift, and that's all right, because we got to understand that price isn't always going to just fall and fall and fall, or rise and rise and rise. So it's always extremely important to take your partials and make sure you don't try not to leave your money on the table, because when I was starting out trading at, there's a funny time I was trading S&P 500 in the morning, and I was up $70. This is when I first started. I was at $70. I was happy. I showed my girlfriend. I was like, babe, I'm up $70. This is crazy. Literally within 2 minutes, I was negative $70. I was being greedy, first of all, because that was the first time I was, making money on my phone. I was like, yep, I'm gonna let this run to 100, and it never ran to 100. It just dropped me, and I almost blew my account. So take that and understand, partial